All right, in this short video, we're going to talk about period costs and product costs. Product costs are the costs associated with selling the product, okay? Product costs are associated with sales of the product, and the cost of goods sold is obviously a product cost. Period costs are associated with the period of time. All right, and here's a good example. The product cost up here is cost of goods sold. The period cost, selling, general, and admin, and depreciation. And we're just doing going through operating income on here. Selling, general, and admin expenses are, generally speaking, the light bill, the rent on the building, and things like that nature that are, they move independently of the level of sales. If you double the level of sales, you're going to double the cost of goods sold, roughly speaking. Okay, so the mix of costs actually affects how well the company responds to changes in business. Now, you'll get this again in operations. You'll get it again in your business finance. You should get it in your managerial accounting. You should get it all kinds of places in your basic econ courses, okay? We all use different terminology out in here, but here's the concept. A product cost, let's say this company, this is a high product cost company. 10,000 is sales, the cost of goods sold is 77,000, which is gross profit margin of about 30%. Sales go up by 20% next year, the cost of goods sold goes up by 20%, and gross profit goes up by 20%, okay? And then if the selling, general, and admin and the depreciation expenses are independent of the level of sales, let's say they stayed the same, they don't go up at all. Look what happened to operating income. It went up by 60%, okay? So we call that operating leverage or, operating leverage. Just leave it at that. Let's look at a different type of company, one that has relatively low product costs but high period costs. Now, how would this work? Let's say McDonald's fired all the workers and installed robots at McDonald's to cook food and stuff. The robots would be a fixed cost or a selling, general, and admin cost because you got to pay for the robots regardless of whether they're making hamburgers or not, okay? And they're going to depreciate. So you wouldn't have as many workers in there. And so if you double sales at McDonald's, you're going to need more hamburger buns. So that's going to go up some. You also need more workers. So that's one of the arguments for switching over from having a lot of workers to having a lot of machines doing the work. And oh, by the way, I go into McDonald's out there on I-20 every time I drive over to Lake Sinclair. And lo and behold, they have ordering machines, so you don't really need to talk to the person behind the counter. You can just plug it in yourself. The machines would be a selling, general, and admin expense as opposed to a cost of goods sold for the workers. In any event, let's look at what with the low product cost. Both these companies had this year 10,000 in sales and 1,000 in operating income. It's just a different mix. 6,500 of selling, general, and admin period costs, 2,500 of product costs, as opposed to 7,000 of product costs, 2,000 of period costs. Look what happens with that 20% increase in the level of sales, though. For this company, because these are basically fixed, okay, they don't go up and down with the level of sales. Our profit goes up from 1,000 to 2,500, 150% increase. That's why it's important to know the difference and to be able to classify expenses into these various categories. And oh, by the way, if instead of growing by 20%, let's say that the business got coronavirus and it's down by 50%. Notice that this company will also lose some money, but this one loses even more. All right, so we call that leverage. All right, that's operating leverage. The higher the level of fixed costs, the greater the operating leverage. Makes the good times gooder, it makes the bad times badder. Airlines, every time that airplane takes off, most of the expense is associated with getting the airplane into the air, whether it's got one passenger on it or 200 passengers on it. Airlines are a good example of somebody that has a lot of high fixed costs, the cost of the airplanes, and relatively low cost of goods sold. All right, so that's why we want y'all to learn this stuff, and that's why they made that distinction in chapter 4. It's important.